Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So we lost the point of control of this consolidation range, dropped down at the 236 of our trend-based bearish trend-based fib extension level, down to the 1 level, and are starting to get a rejection off of this 0.5 equilibrium path of this mean reversion path to the upside. Are we going to find support on the 28,690 region, or the wick that we previously bounced off of, or are we going to continue to this point of control of the previous consolidation range, which would also be a support bounce at 28K? Let's go take a look in the liquidity at the liquidation levels of high block. What is high block? Well, people lock their liquidity in the charts to get burned to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters lie in wait or get burnt to a crisp. So let's take a look. So with the move to the downside that we just experienced, that we talked about going to after taking out these pools of liquidity, we talked about that $43 million character, that lone wolf pool that was going to get taken out, and they sure did.
Fatality.
And that's what happens. And then upon that, they started to drop it because they pinged in some longs in the tune of 108 million pool on that rise up, as people open longs into resistance. Not a good look. And they came down and gobbled up all those 100 extras we talked about. And even then some, they took back some of this little bit of happiness down here. They didn't quite take this 119 million pool, but they did take this 89 million pool of 50 extras and started to bounce off their carcass, because there was another 159 million in shorts opened up here. And so are they coming back to take out these 100 extras? More likely than not, they do. And if it's going to continue lower, it would go off of that liquidity at that time. There's more shorts than longs that have been pinged in this exact moment in time, and there is currently a short imbalance caused off of that. So are we going to go lower into this range or not, is the question. Was 28.98 the low point, or are we going to go higher? Let's go ahead and take a look at the external liquidity range, shall we? I got to make this as quick as humanly possible, which is why we're speeding through it more than usual, and we're going to try to get you the information as quick and as seamless as possible. So they started to ping into the 29K 3 billion pool here and started to bounce off it to come up into these 100 extras that they're overpaying, and possibly they go up and continue down into this region. However, if we look at this, it looks like it's pretty even Steven, and that might have created a little bit of imbalance to the upside now. But if you go into the higher time frame, you will see that there's still a pool that needs to be reclaimed. Shout out to everyone here. Booyah. You have a typhoon? Oh no, that's too bad. Typhoons are no fun. The wind alone is annoying. So as we came into this, we bounced off $5 billion at 29K, 2 billion at 29.1. So 7 billion reclaimed off that drop to the downside to the 29K region. Are we going to the 12 billion down at 28.7 is the question. After pinging out the, this is false move Monday, so after pinging out the longs, they could be coming up to take out these shorts and then continue higher. That is always a possibility. That could have been the bottom, but if we go even further into the liquidity, it suggests that this imbalance is still not reclaimed at 28.7. So the monthly time frame is still insinuating going a little bit lower and reclaiming that wick and trying to bounce off that 28.7 region. If we go to the 3-month time frame, also 10 billion at 28.8, 15 billion 28.6, 10 billion at, sorry, what is that, 29.8. So you're starting to get double digits up in the upwards region as well, justifying the move. but they have to build that pool a little bit more. The ambiguity of the zone we are currently in doesn't express exactly where it wants to go. You got 11 billion here and 10 billion there, slightly more on the 29.8 region. If we go to the 6-month time frame, you'll see that imbalance, as we talked about the last few weeks, starting to percolate to the downside. 142 billion 24.6, 180 billion 24.3 and beyond, and you're starting to get 121 up at 32.1, 72 billion 32.4, 112 billion 32.7, and you're stuck between a rock and a hard place, but the heavier rock is to the downside on the 6-month time frame. If you start to expand your vision to the 2-year, you'll start to see that these pools above are also looking juicy, nearing $600 billion up to 33.2, and you got this 81 billion at the 27.6, 72 billion at 27.2, that if we were to come down, that would be a potential support region. And you got 24.4 with $241 billion, so the hottest amount is down there. And lest we forget 15K with 200 billion, so this entire range is dragging us down, and they want to come and get people's stop losses into profit out that have them in this vector candle. So they're trying to see how many people they can stop out in this region before they shift out. So let's go ahead back to the monthly and the 7-day, and then we'll head into the charts. Come on, I'm too fast. All right, well, we're going to go back to that, and we'll just click this to save time because it should not take that long. Go to the monthly, hit run. Well, while that's loading, we're going to go into the Binance chart. All right, so let's go compare to what we said yesterday, and then we'll make our way through the time frames. So we said that it could potentially be coming up to hit the high one more time. It went down to go up to go down, but essentially coming up into this region at the 706. So this was your 706 rejection here. Take a look. You had this rejection point on the trend-based bearish fib levels. So this was at your 29.431 based off this impulse retrace to the downside. This math contained the move that it wants to do at the 236 entry model. Boom, down to the 1 level at 29K, started to fatigue and does its consolidation thing around this 65, 706, 786 level, and then ultimately getting that rejection point off of the 706 region at 29.431, and boom, dropping back to the downside, coming down to this impulse range of the 706, looking for a bounce here, but most likely this deep retrace is going to fail and you're going to head even lower. So this, as we said before, was coming to this idea to here, wanting to come down to this region. So getting down into this region is conservatively coming to just below that wick and coming, let's see where the liquidity exactly takes us. 28.7-ish. So if we go to the 28.7 region, yeah, that's exactly where our daily support level is. So 28.690 would be a cool idea to think about a bounce if it does get down to that region. And this is why you talk about their 3 hits to the high. So that this was, I was saying this could have been 1 entirely because it was a mini 1, 2, 3 down, and then you had 2, and then this was your 3rd hit, and it was, I was saying it would be shallow. I was like, don't expect it to be all the way up here. It's going to be shallow. I was off by $50 or something, $30, but the idea of it going down from that point was accurate. So we're looking at that rejection on the 6-hour cloud. What is the cloud? Well, we need to throw on our heads up display and toggle our suite to see this. So you guys can do the same. If you have Momentum Master, go to the link in the description, momentummaster.info, scroll down to features. You can toggle everything if you want to see what it looks like, or you can see each component. We're talking about the trend cloud here, which is a volume weighted cloud formula. And unlike other people who use clouds, this one is volume weighted with 𝗥𝗲𝗃𝗃 formula, so the volume also starts to taper, and that thinning is what you're looking at. And since the 6 hour is not thinning at all, you're getting that 6 hour rejection we were talking about. We were talking about watch the 6 hour. We said be careful of the 6 hour because the money flow was above the RSI, and that disparity is going to come back to roost, and it did. 6 hour coming back to roost right now, coming down to that 50 rejection level. The RSI rejected at 50, and the money flow above the RSI suggested you would be getting that correction wave to the downside, which is why we were looking for a correction wave and the rejection at the 706 region. So is this going to come back down? It looks like it may come back down further, and we are looking at the levels for that as well. Would love to see it come to that 28.7 region, liquidate all those bulls that were prematurely and impatiently entering here, and then we can find a smooth chalupa entry inside that area. All right, so let's go make our descent through the time frames before I have to head out. It is nearing 8 o'clock. I gotta go in the next 10-15 minutes. So the daily time frame on Momentum Master, we're having the daily time frame cloud. We're going to remove this so the bias is not set in. So the daily cloud is starting to shift here, suggesting a move to the downside because this is now starting to turn purple. And when the daily clouds start to shift, you start to see that kind of drop. So it's not easily shiftable because it is a higher time frame. So when you see these kind of shifts, although you do have things like this in March where it did shift down, but it had already been significantly shifting down in advance, and this was staving off a large momentum move from January. So this kind of shift can occur, but it does mean in the interim you will have a day or two of downside for that to happen, and it looks like we are having that occur now with the shift here. And is this the second leg down into that 1382-ish level? That's why we've had this level highlighted for some time. We just started to tap into that liquidity, but we didn't really dip our toes in so deep just yet. And if we look at the weekly candle close, which is closing in less than almost an hour, we're looking to close beneath the adaptive, which is not showing signs of support. It's showing signs of fatigue, and you could be coming down further. We already illustrated where those point of controls are on the Coinbase chart. You can go back to that to see where that was. And yeah, the weekly time frame also double topping, potentially crossing down. When we had that cross down event, it did meet with 2 or 3 weeks of downside before, so be aware of that. When the stochastic updates, it will give you that alarm bell or not. Money flow is beneath the RSI, suggesting you could get a push at some point in the weekly close, after the weekly close. The monthly close also closes tomorrow. Please be aware of the monthly close. We do have that last bit of momentum. Does it push us up? The stochastic will probably likely push us up, or it could bring these KD lines down lower because this looks like it's a month of retrace. So it'll bring this K down to the D and then start to give a little bit of a thinning to this momentum, and this could possibly come back for a double bottom. You have this rounded double bottom potential on the monthly. If we go to the 5-day time frame, we watched reset yesterday with the 3-day, and it gave us a little bit of stochastic love back, and we're getting this potential, looks like a duck-billed platypus, but this opening up after the alarm, this momentum looking strong to the downside. You do have the baseline suppression in effect. And if we go to the 3-day, we talked about that cross down event 6 days ago and said watch out for that, because the last time that occurred in April 16th, we had a big drop and 60 days of downside. So just something to note on the 3-day time frame. We could come back down and kiss this cloud at 28.1, and it wouldn't surprise me, which is why I'm not in any long right now. If we look at the daily time frame, once again, that shift in the cloud also insinuating a continuation to the downside, and we're seeing this taper of the KD lines, which most likely what the weekly will look like after the close. And you're seing this potential of a double bottom formation. Looks like a Dorothy's shoe from Wizard of Oz or something. We basically get something like this, where you get this double bottom idea, and then the rising sun out. And that's kind of where you want to look for that on the daily time frame, not just a single bottom, but double bottoms. Williams are stochastic reflections of price action, so oftentimes you can get shoulder, head, and shoulder ideas, patterns out of the Williams better than you can out of the price action itself, just to note. And that's why we have it in the suite, and other people don't use it, and that's another reason. And it's negative, so it doesn't jumble up these lines. It factors the lows more than the highs, which is why it's negative, and that's why it appears down here. All right, so the money flow on the 22-hour is above the RSI, suggesting a fatigue which could come lower. The last time we had this, we did come lower. Last time we were beneath it, we did go higher. So this fatigue disparity on the money flow on the 22-hour does suggest something than nothing, and you could be coming down with the false rising sun signals. If we go to the 12-hour time frame, attempting to take off KD lines meandering at the 50 level, and the Williams starting to meander sideways. The rising sun did not take off here, suggesting we come down lower. What's up, kiddos? Hi.
Hi.
What's up?
Bye.
See you later.
Bye. Bye.
6-hour time frames, as we illustrated, as that was the thing we were looking at that was most noteworthy, was the money flow above the RSI here, suggesting the fatigue on the cloud, which we did get. So we're starting to get this fatigue idea on this 6-hour cloud. We're not seeing the thinning just yet, and then this is what happens. You go up to the cloud, you reject off it. So this rejection of the thick cloud shows the momentum as something harder to shift. We watched how the 4-hour and the hourly tried to make their way out with no avail, and we'll do that right now. So we'll go to the 4-hour time frame. 4-hour time frame, it brought the cloud down to it, which was not necessarily bullish in nature because it did not pierce above. We were talking about if it was bullish, it would pierce above, reclaim the cloud, thin it, and go. So if it were a bullish narrative, you would have seen this pierce with conviction and retrace into the cloud with that shift here in mind. Here we saw the cloud come down to it while it went sideways, so this was insinuating that it was weakness. So the pierce that was coming up was more of a bull trap to take them lower. All right, so but it was also that rejection of the 6-hour, so that's why we have this 6-hour yellow line here as kind of a idea of what we're dealing with on top of this 4-hour chart, you see? So all the time frames work together. And then going to the hourly, we were talking about how you reclaim the hourly and you're trying to go sideways above the hourly, but this kind of meandering around was not expressing very much. And sure enough, we got that rejection to the downside. Okay, so where do we go from here? So we still have the 6-hour rejection. The money flow is extremely overbought compared to the RSI. So coming down with that 6-hour time frame down into these regions that we outlined would be ideal. The 159 million up at 29.3 is concerning to me. So I think that will get a retrace up to that at some point soon, if not before or just after the weekly candle close. So how low are we going is the question. It would be nice to see some conviction down to here, some intention away from this range. If that is the case, they're sputtering because of the pinged in shorts that they had pinged in here. So let's go into total and see if there's anything we can glean about this. Getting a rejection, we did not get any type of bullish reclaiming of this 236 at 1.156 trillion on the daily time frame. We have to get above that level if we want to see newer highs and newer regions of total market cap. And the 236 was not even tested properly, so we are going potentially lower in the bearish 236 entry model here took you down to the 0.65. We did bounce off the 0.65. Are we coming back down to the 706 and the 786 regions? We have yet to hit the 786 on this bearish trend-based fib extension level. This was this impulse retrace idea here. And so the math is telling you you want to come down to this 786 level or below for the total market cap. If we go to total 3, we're seeing some rise up for the Litecoin before the halving. Normally people buy into the news and sell off into the news. So does that mean they will sell off on the 8th when the halving of Litecoin is in? I'm not really interested in altcoins personally, but hey, do you. And so this is the going down into the regions here. Perhaps if it goes below the 786 here and didn't even test the same narrative of the 236 reclamation of the bullish narrative and didn't even bearishly retest the bearish narrative. So are we heading lower on? Looks like we could be heading lower on that. Bitcoin dominance starting to rise as people are potentially getting kicked out into their altcoin pairs into Bitcoin. The USDT dominance also rising. So when these two rise together, it insinuates dump city for Bitcoin. People getting kicked into USDT, people getting kicked out of their alts into Bitcoin dominance as the alts drop, their Bitcoin pairs, ETH BTC, ADA BTC, whatever, they get kicked out of those into BTC, causes the dominance to rise as it's dumping on spot, and then the USDT people get kicked out into USDT. So is this going to continue? Hourly play suggests there's that bullish divergence starting to play out. Still got, it's very overbought on the hourly. Still could see that 4-hour cascade into more upside for the USDT dominance, suggesting some downward action. And let's go ahead into, let's look at the dollar. So the dollar, one thing that stood out from the Fed meeting was Powell saying that they were going to take profits on their securities, so their portfolio rather. So the Fed was going to start taking profits, and that's kind of what this injection was in my mind. And that was when the NASDAQ and all of these things tanked, as they rode up into profit, and then they took profit and put it into the dollar. And so they're taking profits off their investments in the stock market and using it to prop up the dollar's value. So they could be selling off their Bitcoin as well and trying to get that that narrative underway. So if we go back to the 15-minute, 29,166. So we got a wick off of that 29K region, reclaimed some of the liquidity. We talked about that 7 billion, and then also that 100x pool up at 100 at 29,308. So the 29,308 region interests me right now. So 308 would put you here. So there's 108 million up in this region. This also happens to be the 786 of the bearish trend-based fib level. So if you do have this little mini kind of correction before you come into that region, like a little baby ABC in terms of the big one, that would be a place where they could also induce leading the Asia pump up into Asia's little pump up into the, kind of London handoff. The silver bullet is around like 4 o'clock, I think. So like something like that. Or it could even just go sideways and start to lead it into the New York session to do it. It's false move Monday, so they're gonna test the lows and then test the highs and then make a decision from the liquidity based off of that, and that's where the move for the week is insinuated. So let's go ahead and move back to the hourly time frame. Hasn't really gone anywhere though. I mean, you've just gone sideways essentially from Friday to the top and the bottom of these ranges. So yeah, are we going to go hit this wick at 28,864 and then go down to that level? I'd like to see it personally, but yeah, I'd like to see this reclamation of this entire pool, and then we'll assess from there. Just like at the 29.2 region, we assessed and we said we were going to enter a long, and it did play out slightly, but the sideways into the FOMC was not my cup of tea, so I ended up getting juked out. But hopefully there's no news inbound, so we can see some genuine, like, non-fear induced moves here after it comes into a region. So one thing to stop the narrative of going down would be these 150 million pools. Let's go see what they induced in the longs, because it's all stacked up here. So they had 28 million, or sorry, 83 million, 11 million, 11 million, 13, 36, 41. So those add up. And if those add up to more than this, then, and these guys too, then it starts to create more of a drag to the downside. As it stands, though, it looks like they want to go up to this character at the 159 level, and they need to stop out some of these 100xers first. We'll see. Also, leading into the weekly candle close, once again, the weekly candle close is in less than an hour now. Does the weekly candle close try to get a burst up into that adaptive level up above the 786 to give a bullish close out for the week, or are they trying to give some stochastic data back for the weekly candle close leading into the monthly? They might be holding off their ammunition for tomorrow. We'll see. The bulls might not be stepping up to the plate for the weekly candle close, but rather the monthly tomorrow. So let's keep it chillaxing. So they came back, stopped out these guys, went deeper into that and took out all their stops of these guys here, and basically all of these guys into this region, but have yet to take out these stops down here and beyond. So what we'd like to see is a reclamation up to that 100x pool up at the 29, sorry, precise, I like being precise, 29,308, and then if it comes up to that and fades or pings in some longs at that time, then you could see this come back down to these region and below. All right, that's my story and I'm sticking to it, folks. I gotta go with my daughter and some people from my work to go pick some grapes in the mountains. So hopefully that suits your, that everything made sense. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. And we'll do the same, bringing the fire, the precision, the accuracy, all that fun stuff.